The Nigerian Economic Forum, which has begun in Johannesburg, South Africa, presents high-level information and networking opportunities for investors and businesses with interests in Nigeria, probably Africa's largest market after South Africa. The headline speaker is Oscar Onyema, CEO of the Nigerian Stock Exchange, who joins us now. Oscar, thanks so much for your time. Obviously, since you came to the helm of the NSE, people are looking to you for direction to restore confidence in the Nigerian stock market and to introduce a level of dynamism in that market. Now that you're in the seat, what have you identified as key priorities?
I think the key issues we've seen is really investor confidence and the lack of liquidity and depth in the marketplace. So our key priorities are really to help bring back investor confidence in the marketplace, introduce measures that will deepen the market, and then also roll out new products to allow for diversity of products.
Investors have really been fence-sitting, some would argue. You know, despite all the reforms that have been taken concerning the banks, AMCON to inject liquidity, processes now to recapitalize those banks, introducing governance procedures, financial reporting rules, people are still not sure how to treat Nigeria. Why is that?
I think there's a lot of excitement about Nigeria and the Nigerian capital markets. And like you rightly pointed out, a lot of the institutional investors are sitting on the sidelines because of the uncertainty surrounding the resolution of the banking crisis. We believe that with the action that was recently taken by CBN, NDIC, and AMCON, that we should begin to see some closure to the banking crisis. And so you will see certainty coming back into the market, and that should really help to drive investors back into the equity markets.
What the banking crisis has demonstrated is the fact that the index is heavily weighted towards financial institutions, and there are calls that please try to get new listings and try to get them from new sectors, such as telecoms, for instance. Start to get property investors coming to the market to raise funds. What are you doing in that regard?
You know, if you look at the distribution today, banking is 36% of the pie, and then building materials is another 16%, and breweries and food and beverages account for 12% each. So we need diversification, and we're looking to certain areas: telecom, oil and gas, upstream oil and gas, utility, and agriculture, which accounts for about 32% of our GDP.
How exciting do you expect things to be? Because you talk about utilities, and we know that the government has embarked on a very aggressive power sector reform drive. We're also anticipating, hopefully, conclusion of the petroleum industry bill, new entities coming to the fore. How's the market going to support these reforms?
We're excited about these reforms because with power, for example, you have about 18 new companies that potentially will be coming to market. With the PIB bill, you have the potential to bring NMPC or some variant of it to market. The joint venture alliances that we have with various multinationals, there's a potential there to bring them to market. So there's huge potential, and as you know, a significant portion of our market is driven by foreign investors. So they're also watching keenly to see what happens here.
They're also looking at the secondary markets. Good news was the CBN's lifting of those restrictions on foreigners who owned government securities. But there's a sense that, you know what, corporates needs to be raise their bonds on this market. We need to see some of the states raising their subnational bonds. We need a little bit more dynamism on that side of the market. What are you doing about it?
You know, there's been a lot of activity on the bond side, actually. One thing that a lot of people do not know is that you can issue bond on our market without necessarily being listed on the equity side, and this is with regards to corporate bonds. A lot of the states are issuing infrastructure bonds. It's a very exciting new area for the states in Nigeria. With regards to the fixed income market, the federal government has really been very active in issuing new bonds that are also listed on the exchange. So there's a lot of activity, and some people would even tell you that investors are kind of like moving away from the equity markets to the bond markets.
Definitely, that's been the trend in the last few weeks. New products, people are looking to you to introduce things like exchange-traded funds, other kinds of agricultural derivatives, maybe Sharia-related investments, given the huge Muslim component of the Nigerian body politic. What are you doing in that regard?
Well, we're looking to have 5 products in 5 years. Today we offer fixed income and equities. we're looking to deepen those two markets, but in addition to that, to offer exchange-traded funds, options, both equity and index options, and financial futures. Well, we think we can start with currency futures and interest rate futures. We also, like you said, talking with certain index providers with regards to what we call interest-free investments. That is the politically right way of saying it. And what we found is that a lot of non-Muslims invest in these vehicles as well. So it's not just a religious thing. It's really about whether you believe in what will give you the highest returns.